latest news, obviously, is that the LSE's takeover panel has made an order for the Simon Property Group to make a firm offer to you guys or withdraw. But reports recently suggested that Simon Property Group had made an offer of £3 billion. What's all this all about?
Yes, we're delighted that the takeover panel has now established the date of the 12th, by which they, in the UK, we call it a put up or shut up order, so that Simon has to make up their minds by that date. All we've received so far is an indicative proposal, which we rejected as completely inadequate. It was at 425p per share, which we believe substantially undervalues the company and its prospects. And that letter was highly conditional on financing, on due diligence, on the Simon board approving it. It had no time scale, and it also had gave Simon the right to terminate its interest immediately at any stage and without reason. So, as a board, we regarded that proposal as very unsatisfactory, and therefore we're pleased that the panel has put this timetable in place.
Let's talk about what's happening in your stable in terms of the broader view of the shareholders. I know there'll be an extraordinary meeting, but before we go into that matter, we're told that shareholders have been a bit reticent with regards to whatever proposal had been put forward, worried that in future Simon stood to gain a significant proportion from the assets that are in the CSC stable, from the expertise in the CSC stable. They want a higher offer. Just tell us what's the thinking at the moment in terms of what would constitute fair value on the part of shareholders?
Well, I can't really get into specifics on price other than to say that what we've had so far from the Simon Group has been completely unsatisfactory in terms of price. That if you look at the business at CSC, we basically have a unique portfolio of shopping centres in the UK, irreplaceable. We've built it up over 30 years. With the Trafford Centre deal, we'll have 4 of the top 6 out-of-town shopping centres in the UK. This is in an environment where planning permissions are very hard to get, very high scarcity value and barriers to entry, and we are far and away the market leader in the industry. So for all those reasons, we believe any offer must reflect what we call an irreplaceable and unrivaled portfolio of shopping centres.
Okay, fair enough. Now, the extraordinary meeting for CSC shareholders has now been postponed to the 26th of January. And here shareholders effectively will be voting on the acquisition of the Trafford Centre. How does this particular transaction impact on this proposal?
Yeah, we're pleased now that by adjourning the meeting, what we've done is given the shareholders the chance to make a fully informed decision where they can weigh up whatever comes through from Simon against the Trafford Centre acquisition. Just on the Trafford Centre itself, I mean, this is a very rare opportunity in the UK to acquire a centre of this quality. We would regard it as the best shopping centre in the UK outside London and the South East, and opportunities in the UK to acquire centres of this quality are very rare. As a centre, it gets 35 million customer visits a year, has anchor tenants of Selfridges, John Lewis, Marks and Spencer's, Debenhams, about as good as you can get. It's got a great catering and leisure offer, trades well into the evening with a very high customer profile, and the Manchester region is the second most important retailing region outside London and the South East, with something like 9 million people in the catchment. So it's a great asset, and we'd be delighted to acquire it.
David, very quickly, I mean, you spoke about conditionalities that had been set by the Simon Group. They have been very sensitive about this particular issue, wanting you to almost forfeit the offer for the Trafford Centre. At least that's what's been reported in the media. Why is it sensitive for them?
Well, I mean, I think they're a 5% shareholder, and obviously they harbour deeper ambitions. and they see the Trafford Centre transaction maybe as not helping those ambitions. But from the company point of view, we're looking at the Trafford Centre deal as an excellent move forward for the company that really entrenches our leading market position in the UK shopping centre industry.
And finally, I mean, obviously CSC has about 45%, even more South African shareholding. How vocal have local shareholders been?
Yeah, we've kept in touch throughout this process very closely with our South African shareholders. Clearly for South African shareholders, the CSC share has particular characteristics. It's an excellent RAN hedge for them, gives them exposure to international assets, gives them exposure effectively to a whole industry in the UK shopping centre industry. So we've had a very long and satisfactory relationship with our South African shareholders, and we look forward to that continuing to the future.